Ladies and gentlemen, it is 2024. The Wolf of Wall Street is no more. The era of Gordon Gekko has come to an end. The era of the tax haven is dying. In other words, the tax haven is dead. Long live the hybrid. And today, we're going to discuss why. Stay tuned. Hello everyone, how is everyone doing? This is Javier Correa, your Research and Development Associate from Nomad Capitalist, where we help 7- and 8-figure entrepreneurs go where they're treated best. And you know what? The way in which entrepreneurs go where they're treated best has changed significantly. You know, if we go back to the 80s, to the era of the Wolf of Wall Street and Gordon Gekko from that great movie. If you haven't watched Wall Street, please go watch the movie. Fantastic movie. Number 1 and number 2, definitely recommended. But I don't want you to get the wrong idea. And the reason why I talk about, movies and TV series often with clients is that they'll come to me and they'll say like, oh, I watched the 1987 movie Wall Street, Blue Horseshoe loves Anacott Steel, and they had this investment fund in the Cayman Islands, and they were able to defer tax or not pay tax and whatever. And I'm like, sure, that may have worked partially. Hollywood does exaggerate a lot, but it may have been more realistic as a scenario back in 1987 or 1985 than it is in 2024, and then it will be in 2025. And the reason why I mention this is because the era of the traditional tax haven, the era of that, secluded Caribbean island or that small territory in the South Pacific where you have nothing but beaches and maybe one building with 15,000 companies and strong secrecy laws and countries that don't report anything. That era and the era of those territories is coming to an end. In 2024, 2025, it is no longer the time to play hide and seek. It is time to play show and tell. It is no longer enough to play the game of hiding your money offshore, which, by the way, we never recommend you do that. We are the goody two-shoes of the offshore industry, as our founder, Andrew Henderson, likes to say, and we do things legally, and that is the key word here, legally. Tax avoidance is legal, unlike tax evasion, by the way. We have a great video on that. You should check out that video on our channel. But all of this plays into the dynamics of the 21st century. So that secret Swiss bank account, that anonymous corporation that you were able to open in a Caribbean island, and you were able to hold shares and bearer shares and not declare you were the owner, that era is completely gone, right? So you have FACTA, you have CRS, the Common Reporting Standard, you have all of these information exchange agreements between countries. The era of technology has all but completely eliminated anonymity from the world. So the idea of you looking to just park your money offshore in a place where no one will find it is just simply outdated. It may have been the way that your grandfather did business. It may have been the way that potentially your parents did business, but it is no longer the way in which you should do business. And this is why I want to talk about the rise of the onshore-offshore hybrid, which is really dominating the industry. And this is where companies like Nomad Capitalist become a vital ally to help you navigate all the possibilities that these new hybrids may potentially offer. So what is an offshore-onshore hybrid? An hybrid, in the way I have described it, is essentially a country or a tax jurisdiction that may seem like a high-tax country on paper, that may have some of the traditional tax policies that you associate with a place that you would want to avoid. Worldwide taxation, tax rates that are progressive that go up to 30+%, and so forth. But that in reality, when you dive in deeper and when you understand their tax codes, more specific details, then you realize that these are countries that offer tremendous opportunities. And where do you find a lot of these? For example, in Europe. When I talk to clients here at Nomad Capitalist, many of them are actually very surprised and impressed to see that they can live in Switzerland that has very high headline tax rates, but they can practically pay zero tax, or they can pay very little tax and still live in Switzerland. They can pay very little tax in Malta. They can pay very little tax in Ireland. They can pay very little tax even in Spain. We had a video out recently about Shakira and all her problems with the Spanish tax authorities. But did you know that you could even move to Spain and potentially for a period of time be under a very optimal and beneficial tax regime? So all of these things are elements with which Nomad Capitalist can help you. And the reason why we call these jurisdictions onshore-offshore hybrids is because these are countries that are perfectly perfectly integrated into the global transparency network. These are countries that have developed tax treaty networks. These are countries that are signatories of CRS, that are complying with FACTA, and that won't cause any issues with you in terms of your compliance and in terms of your day-to-day business. But these are also countries that will provide, at least for a period of time in certain cases, and in other cases indefinitely, some very interesting tax incentives which will allow you to basically optimize your situation as if you had relocated to a tax haven. Now, the big difference here is that things aren't as easy as they used to be. You know, in the 1970s, you would relocate to the Cayman Islands and that was it, zero tax, period, no more questions asked. In 2024, you have to move to Spain under the right regime. So we have to move you to Spain under the Beckham law. You have to have the right residence permit. But you can be under the Beckham law, under the special expat tax regime, and effectively enjoy a de facto territorial tax system in Spain, largely speaking, for about 6 years. You can move to Switzerland or Italy or Greece under the lump sum tax regime if you do it right, if you have the right residence permits, if you have the right offshore structure that supports you, you can pay a flat amount of tax. So basically 200,000 euros in Italy, now that they've increased it, 100,000 euros in Greece, as it hasn't been increased as of now. Stay tuned. If there are any developments regarding that, we will be the first to break the news to you. In Switzerland, you can pay, depending on your situation, somewhere in the low six figures or in the upper six figures. But, you know, you will pay something in tax. But overall, if you're a multimillionaire, if you're a wealthy individual with investments all over the world, it might be very profitable for you to live in these countries. You could also move to Ireland under the non-dom program. Let's say, for example, you are an American, you want to move overseas, potentially optimize some taxes that way. You know, many of you have Irish ancestry. That potentially is something we could look into for you to relocate to Ireland. It is, you know, more difficult for a citizen to qualify for the non-dom regime, but it is not necessarily impossible. The same thing happens if you're in Canada. A lot of Canadians are descendants of Irish immigrants. And so this is the game that we play now. We play a game in which you are relocating to countries that are well integrated, fully compliant, whitelisted jurisdictions, but that also allow you tremendous savings in terms of tax, whether it be a non-dom regime, a lump sum tax regime, a special expat tax regime, and so forth. In addition to that, the main reason why we like this is because, you know, opening bank accounts, especially as a non-resident, is becoming much more difficult. So, you know, again, to go back to my analogy, in the times of Gordon Gekko and the Wolf of Wall Street, you know, the 70s, the 80s, you could walk into a Swiss bank with a briefcase full of cash. Usually not many questions were asked and you could open that account, numbered Swiss account. It was beautiful, great. Maybe some of your grandparents or great-grandparents opened accounts like this, but that's just not the case anymore. And guess what? If you walk into a reputable bank, right? We're not sending you to like a undercapitalized little bank that no one knows, but if you want to go to a reputable, strong bank in the US, in Switzerland, in the UK, in Hong Kong, and you say that your tax residence is in a place like Vanuatu, listen, you might have a difficult time opening that account. If your tax residence is in a traditional tax haven that potentially is blacklisted, or that very likely is blacklisted by the jurisdiction where the bank is incorporated, guess what? You're probably going to have a tough time opening the account. Now, is it impossible? No, it's technically not impossible. The bank will assess your individual circumstances, where your income is sourced, what is the source of your wealth overall, if your family is well known in the banking world because maybe your grandfather was wealthy and you come from a legacy family. But overall, it is much more difficult to obtain good banking infrastructure nowadays in 2024-25 if you are located in a blacklisted jurisdiction. So imagine having the best of both worlds. Imagine being able to live in a city like Madrid, or like Dublin, Ireland, or like Valletta in Malta, or being able to enjoy the luxurious lifestyle in Lake Como in northern Italy, or in Geneva, Switzerland, with the add-on benefit of being able to optimize your taxes as if you were in the Cayman Islands or the Bahamas. With proper planning, this can be done. Potentially you won't get to zero, but you might get to the very low single digits. And because a lot of these favorable tax regimes, you know, we talked about non-domicile tax regimes, lump sum tax regimes, special expat tax regimes, and so forth, are located in Europe, it is now more valuable than ever to claim that European citizenship by descent. You know, if you're watching this video from the United States or Canada, potentially even in South America, Venezuela, Colombia, Argentina, chances are you might have a grandparent or a great-grandparent that came over from Italy or Ireland or Spain in the case of Latin America. And you know what? That grandparent might have a post-dated gift for you, a beautiful European passport that would allow you to relocate to your ancestors' country or any other country in the European Union. In the case of those of you who have Irish citizenship, potentially by descent, you are in a very unique and privileged situation because you are basically the only citizens that have the right to relocate to anywhere in the European Union, as well as the United Kingdom of Great Britain and Northern Ireland. You're now the only citizens who can actually do this. And you know, this is one of the things that I love about Nomad Capitalists. Under one roof, we can help you track down that grandmother or grandfather, so that grandparent in general, that might potentially give you that European citizenship or any citizenship for that matter by descent. And then we also present to you the vast array of tax options that fit perfectly into this new onshore-offshore hybrid, so you can take full advantage of both the immigration service and the tax service, so you can definitely explore all these different alternatives in the 21st century.